A number of clients that I am speaking with lately have talked about how they greatly benefit from taking the mortgage forbearance earlier this year and avoiding making mortgage payments for 6 months or so. But there's some things that have occurred lately that I want to make sure everybody is aware of, eyes wide open. This is Ron Wysokarski, and today I want to talk about how the calls coming into Wise Home Team Realty are sounding when it comes to mortgage forbearance. Let's face it, it was super tempting to click a button and not pay your mortgage for 6 straight months. And despite all the information out there, a lot of people still click the button, sometimes unnecessarily. Don't get me wrong. If you absolutely needed financial relief, there really wasn't an option, you did it, and you kicked the can down the road, for another day. We're finding astoundingly large numbers, upwards of 80% of people that have gotten themselves off of the forbearance and they've got their mortgages current or had some sort of a workout that is going to keep them in the house for the foreseeable future. And I think that's what the intended consequence was hopefully going to be, and it's showing more than 80% of the time it's actually happening. So that's been fantastic. For the 20% or so that are not in that performing state, there's still some workouts available, and I'm not convinced that they're going to foreclose anybody, but it's going to cost more money down the road, which I guess if you still have your house, maybe it's worth it. And, hey, no judgment. If you needed it, it was absolutely no-brainer. Just do it. But what I'm also hearing is some people went out and didn't make the mortgage payment on the house, but they could have made it. And now you have to ask yourself, if you're avoiding a payment, what are the consequences? Well, if you put the money in the stock market, great. And if you made a bunch of money, fantastic. If you went on a trip with it, or if you bought something with it, at your own peril, we're all adults, you know what your credit is, and you know what your house is worth to you. If you made that decision, if you didn't have to avoid the payment, here's what you could be facing right now. If you were going to make a move and attempt to get a loan, that forbearance is showing up on your credit report, and until that is completed and is shown brought to date 100% current online in a certain period of time, depending on the lender, it could be 30 days to 90 days, you are prevented in most cases from getting a mortgage. So you may have kind of shot yourself in the foot if you're planning to catch it all up in, let's say, November and buy a house in December before the end of the year. So we really need to examine, how do we get you out of this? Sometimes it's not as easy as it sounds. If you just wanted to, put the money in the stock market, and I kind of brought that up earlier. I hope you made a lot of money because there are increased interest rates coming out of a forbearance, because what I have found recently, in speaking with the lender, my clients, is sometimes the forbearance really wasn't coded properly with credit bureaus. And I've seen evidence where an 800 credit score individual is in the 490s because it was coded as a foreclosure, not making your payment 6 months in a row, as opposed to a forbearance. That's not something that takes a minute to fix. That's going to take some time. So they're going to be out for a while. Meanwhile, unintended consequence, when your credit drops that quickly, chances are, if you've had a number of credit cards over the year, you may take a look. If you had a $10,000 or $20,000 limit, it may have been cut to $5,000, $2,000, or cut off completely. It also might affect your insurance rates across your car and your life and your health. So there are some bad things that happen to good people by pushing a button. So I'm not sounding the alarm. What I am saying is, if you are in a forbearance situation and you haven't resolved it yet, do a couple of things. Find out what the plan is to get out of it. Whether you're trying to buy a house or finance or not, it's probably a good time to take a peek at that and make sure that you're positioned properly so that if you want to make a move, you can. But more importantly, on the unintended side, if you find out that your credit lines have been cut, that will take a while to grow those back. And if they close out the card, that could also affect your credit score. And then finally, it's that time of year where everybody's looking at insurances, and that can affect your rate as well. I know it sounds crazy, but a little thing like pushing the button for a forbearance, if it wasn't necessary, could come back to bite you just a little bit. If you've got questions, we've got some great lenders that are advising on this, and we'd love to introduce you to them. Click your comment below and let us know your thoughts on mortgage forbearance. The good part, the necessary part, and the unintended part. This is Ron Wysokarski at Wise Home Team Realty.